Happy Wednesday, everyone. Welcome to yet another show. Now, this is the first show for our English speaking audiences for March. So, welcome for the series. And if you do want to know more about it, you'll have to stay till after this video. But once again, you're with me, your host, Olivia Higgins. And while we wait for a few more people to join us, here's a video just for you. Enjoy. Welcome back, especially those who just joined us. Once again, you're with me, your host, Olivia Higgins, and those tuning in, whether on YouTube, Facebook, or in app. Welcome to the show. As usual, here is your chance to network with us, okay? So take this chance to network with the community, ask your questions, and at the end of the day, it's really about learning. So do not take anything as financial advice or recommendation. We're here to be the bridge to experts on the show and also to key topics, especially, we're looking at the year ahead. We're just starting, but, time is passing so quick. We're already in March, but there's always opportunities out there, potential opportunities that you can look out for. And therefore, really, to navigate market uncertainty, it's always about equipping yourselves with new knowledge and tools, such as tuning onto a show like this today. So remember to ask your questions because we'll use the second half of the live show for that. Okay, let's hop right in, everyone. Today's topic: strike with precision. Now, we're going to talk about how you can invest in China's 50 leading companies. So, with me today from Phillip Capital Management, let's welcome onto the show for the first time, everyone, Deputy Chief Investment Officer Tech Lang. Hi, Tech Lang. How are you?
Hi, Olivia. I'm good. Thank you for having me. Good evening,
Thank you
everyone.
for coming onto the show. Now, tell the audience members who just joined us about yourself, but also the objective of today, Tech Lang.
Sure. So my name is Teck Ling. I'm running funds over at Phillip Capital Management, which is one of the local fund managers here. We have been running unit trusts and more recently ETFs as well. So today we are going to introduce our seventh exchange traded product. And basically it is an ETF that is investing into leading companies on the China's A-share markets.
Absolutely. Thank you for that introduction. And also, I'm really looking forward to our discussions, but also the questions that we're going to get from the audience members. So definitely already start typing it in. What would you like to see during this particular live show? Thank you again for joining us. But at the same time, remember, okay, it's to network and to ask your questions, anything you want to know about the topic, but also because this live show is an IOP exclusive, it's based on the launch and promotions that we have for you. So this is an exclusive show with Phillip Capital Management. So definitely use this chance, okay, to get to know both the topic much better for yourselves, for your knowledge base, but at the same time to also network with the community. Now, I want to go straight into the topic, Tickling. So, my first question for you: why invest in China shares when the economy and market are in the doldrums at the moment? We're talking about also various uncertainty and also macro factors. So, why invest in China right now?
Yes, sure. If you were to consider China, of course, there is a lot of bad news, but basically, bad news make headlines, right? That is what draws eyeballs. And if you have some conviction on the long-term track record of China, both in the past and in the future, well, definitely this is an interesting time to look at now, right? So, for example, if you look at slide 5, right, I just want to show you the track record of China over the past 40, 50 years. If you look on the left-hand side chart, that basically shows you the contribution of specifically China and the US, China in red and the US in blue, their contribution to global GDP over the years since 1960 until now. So you can see that China has basically grown from almost nothing as a percentage of growth global GDP to what is now about 20% of global GDP contribution, right? And in fact, if you were to look at purchasing power adjusted GDP, so basically it's the same number, but you adjust it for the purchasing power of, say, 1 unit of GDP in China, what can the basket of goods that it can buy in China itself? Well, that buying power for the Chinese consumer, that aggregate GDP is actually on a purchasing power adjusted basis already the largest in the world since 2016. And you can appreciate that on the slide, on the chart on the right-hand side. Since 2016, it's already in red, it's already surpassed the US. Well, you look at slide 6, and that basically shows you the size of the capital markets, the stock market in China. So that also gives another angle on appreciating the size of the capital markets in China, specifically the stock markets. You will see on the left-hand side that if you were to rank the global stock markets in terms of the size of the total market value of the companies listed inside the respective share exchanges, of course, the top two, the main ones would be the US, of course, the two that you see at the right at the top. But here in red are the two major Chinese domestic exchanges, namely Shanghai Stock Exchange on the top, and then Shenzhen Stock Exchange after that at 7th place. So together, China's domestic A-share markets, that's what we call the domestic markets, together they already exceed $10 trillion, 10 trillion US dollars in terms of the size of the companies, the total market value listed inside them. But that is not all, because if you were to look at on the chart on the right-hand side, basically, the total value of these companies as a percentage of GDP for China, it is still relatively small compared to that similar ratio for the US. That similar number, basically stock market total value versus GDP in the US, that's close to 200%. Whereas for China, that is still below 100%. So what I'm saying here is basically there's, in terms of the capital markets, still more room for growth compared to a mature market like the US. And that growth is likely to come in the form of probably new companies listing on the stock exchange, right? And also possibly the appreciation of the value of the existing companies as well, right? Basically, the first two slides I've talked about is trying to highlight about the size of China in terms of GDP, in terms of the capital markets. Well, what does that mean, basically? Well, size by itself is important because it gives you a sense of the critical mass. Because as you know, China is now transiting to a dual circulation economy. It used to depend a lot on exports. So now the government is trying to also encourage internal consumption. Will that transition succeed? Well, we think that the critical mass is important, and definitely China in terms of internal purchasing power and the income that's been built up over the years, the savings that's been built up over the years, there is definite critical mass for consumption. And secondly, that is equally important, the growth of China over the years from nothing to 20% of global GDP, for example, and the growth of the capital markets in relation to that, that shows the energy, the willpower of a people, right, to succeed, right? You wouldn't bet against the Chinese. In other words, you would appreciate that. For example, I think many years back when the Chinese leader Deng Xiaoping visited Singapore, and he talks to our Prime Minister Lee Kuan Yew at that time. So he was quite impressed by what Singapore had accomplished, and Lee Kuan Yew was commenting to him that, you know, what we have here are basically the coolies, the lower class of China, who have immigrated from mainland China and made what Singapore what it is today. But what you have in China are the elites, the mandarins, the offspring of the mandarins. They are the elites. So his underlying meaning was, surely China can do well if Singapore can do well. And look, after 40 years, 50 years of saying that, that has indeed transpired. And I think the same logic applies today as well, right? If we were to look at the attractiveness of the China equity markets in slide number 7, that's another facet of it that I'm looking to highlight. And that's basically the fact that China's domestic equity market is basically running on a cycle, a market cycle or a market rhythm that is quite different from global equity markets. So as you can see in the chart, that's the bottom row, especially MSCI China A shares. So that measures the performance of China's domestic equity markets, right? You can see that the correlation of this market versus the major developed market equities, major developed equities markets such as the US S&P, FTSE, the French CAC, and so on, that correlation is pretty low. What that means, anything below 30% is basically pretty low. So what that means is that basically, if you want a portfolio where there's some risk mitigation by different components within the portfolio that basically perform well at different times, so that's the classic diversified portfolio, then definitely for the equity portion of things, China A shares occupies an attractive part of this segment. Looking at slide number 8, where are we now in terms of valuation? Well, as I mentioned, so it is attractive now, especially if you are interested in China on a long-term basis, because the quality of the companies inside, right? I guess Warren Buffett would typically say that, you know, the long-term value of, or the long-term economic mode of a company typically does not change that much. And therefore, if you look at China's A50, that's what I'm highlighting here in this chart, the line on the at the bottom, which is the red line, that basically shows the valuation on a PE basis of China's A50 index, right? And that's trading at something like 10 times price earnings or below that level. On a comparison geographically versus the major stock markets such as the S&P 500 in blue, or Japan's Nikkei 225 in brown, and so on, you will appreciate that, for example, the US and Japanese markets are trading at something like over 20 times price earnings, right? So whereas China is less than half of that, for example, on a PE basis. So geographically, I think on one basis, you would say that comparatively China is looks quite attractive, right? Second basis is basically historically against itself. Even that against itself, the MSCI China A50 index, that's what we use as a proxy for the China's domestic market here. It also looks attractive versus itself, right? So right now at below 10 times, what we estimate is something like is trading at 1 or 1.5 standard deviations below its long-term average mean, right? Looking at slide number 9, we move on to another set of considerations, because people are always considered, well, they say, okay, good, looks like this is a value market, it's trading cheap, it looks like its fundamentals is acceptable, right? Of course, there's a slowdown and so on. I think I wouldn't deny that. But is there a possible value trap, right? Value trap means that you might be holding it and then it doesn't move for the longest time, right? And that's where this slide comes in, and also the next slide as well. This slide, basically what I'm trying to illustrate is China, or does China have the capacity to boost the economy through government policy? And indeed, this has been a key narrative or a key consideration of the markets investors when they look at mainland China equities over the past few years, has been slowing down. And the past experience is that the China government, say after the global financial crisis in 2008, they have been very aggressive implementing stimulus, and that has worked well both for the GDP. It has also done well for the capital markets, the stock market after the GFC. So will it do it this time? Well, looking at this slide, China has the world's largest forex reserves. Forex reserves, everybody knows, right? Singapore's Temasek and GIC. So everybody's familiar with forex reserves. Well, China is the world's biggest by almost 3 times against the next biggest one, Japan, right? It also has reasonable debt headroom, which means that it can, looking at the numbers against the GDP percentage, which is the bottom chart, it definitely has some headroom for it to borrow further if it wants to run a deficit on the budget in order to stimulate the economy. Because at 83% of GDP for the government debt, it actually is lower than the average advanced economies level of over 100%, for example. Right? It has the capacity, but will it do it? That's what brings us to slide number 10, right? So the narrative is this, that over the past few years, the Chinese government has been more concerned about the leveraging the economy, about encouraging a transition to a dual circulation economy that I mentioned just now. That means internal consumption and so on. And also about encouraging what is so-called quality growth. Well, what is quality growth? Basically, they are trying to encourage, well, I would interpret their quality growth along several facets. So one is that they're trying to encourage, they have this common prosperity theme, right? It's like wealth for the masses, right? So that's definitely one thing that they're trying to encourage, a more even and fair wealth distribution. That's one part of quality growth. The second part, of course, is probably innovation-driven growth, right? And especially now, I think with all the geopolitical troubles and so on, they realize they have to grow their own domestic tech ecosystem, for example, right? So definitely, I think that is another facet that they are looking at in terms of quality growth, right? But over the past few months, I think the momentum for more aggressive action for the economy and for the capital markets, I think that has built up. That you can see that in the more urgent policies that the Chinese government has been rolling out as the stock markets have weakened. So that has sort of manifested itself in these few areas. You see here that they have, on the monetary policy side, they have cuts the bank's reserve ratios, right? What that means is basically now they require the banks to hold less cash in reserve, and therefore the banks will have more to lend out. On the fiscal policy side, they have projected or planned for a budget that is expansionary. So running a 3% budget deficit is actually at the high end of the budget deficit for the Chinese government. historically. And they have also planned for about 1 trillion yuan in financing for affordable housing programs, something like what you have for HDB, right? Except, of course, that is intended to look at replacing some of the supply from the property developers that have failed, right? So I think also others would have been focusing, other measures have been focusing on the market measures, such as tightening trading restrictions to limit short selling, right? And also stock purchases. So the government has also on the demand side tried to lean on state affiliated funds to make stock purchases and ETF purchases on the stock market to boost the markets. So that is some of the measures that have transpired over the past few months, and therefore, as a result, I think the market have been sort of reasonably well supported since. If you saw the China's A-shares market, it has been quite resilient over the past few weeks, right? So I think some of these are working its way, right? So that's basically the investment case for China, right? Over to you, Olivia.
Thank you so much for that. Now, you covered why invest in China shares when the economy and market are in the doldrums. I mean, we already got some questions related to this. So, we're going to answer some of them, okay? But keep them coming to the audience members right there. I mean, we already transition and touch on the various major stock markets where investors can buy China related stocks. But let's expand that further. That can be the extender question on where the investors can look at in terms of various stock markets where they want to buy these China related stocks. And the second part as well, Tekling, is could you just provide us more details about the China equity ETF that PCM is planning to list? And also because we're on an exclusive launch live today. What do you think, Tekling?
Yes. So just to give a perspective, so basically the ETF as that we'll be launching, that we have launched actually, that I'm talking about is basically an ETF that buys into the China A-shares markets.
Mm-hmm.
The China A-shares market is basically the domestic equities market, and that basically includes stocks that are traded on the two major exchanges on mainland China. If you look at slide number 11, right, just to give you a preemptive on what the various mainland shares that are traded in different markets, A-shares is the ones that is traded in the domestic exchanges, either Shanghai Exchange or Shenzhen Exchange, right? The ones that investors are more familiar with probably are those in the Hong Kong market and those in the US market. The ones in Hong Kong market, such as Tencent, Alibaba, everybody knows them, and also includes some of those that are actually also traded on both on the Shanghai, the domestic markets as well. Basically, the major state-owned enterprises such as PetroChina, ICBC, China Mobile. So those are known as H shares on the Hong Kong exchange. US, I think, has tended to trade more tech stocks and EV stocks, right? And over the years, I think the US has tried to lean on some of these listings from China, right? Well, why are we looking at A shares? Well, before I look, perhaps I would just want to talk a bit about what is shown on slide number 13, which is the key features of this ETF that we are listing it. Right? So basically, this is a partnership with China Universal, which the name of this ETF is a bit lengthy, but it does incorporate a lot of the elements of what it's about, right? Well, first of all, the fund managers is ourselves, and we are partnering with China Universal, which is basically a major fund management firm on mainland China. In fact, this ETF is basically a feeder structure, a feeder master structure. So basically, a feeder ETF is what we'll be doing is that we'll be primarily buying into the so-called underlying ETF, which is what people also know as the master ETF, which is listed on the China exchange, and actually in this case managed by our partner China Universal. So in this way, the master ETF tracks the index, obviously, and in this way, by feeding primarily into them, basically we are also able to track the same index. So that's the essence of what a master ETF, master feeder structure is about. And the index itself, as shown in the name, MSCI China A50, right? So that's the index that basically what it's from MSCI, and basically it's designed to give exposure to the leading 50 companies, as you can see in the name, the leading 50 companies listed on China's A share market, right? And I will also talk about how this index is constituted, right? And that's shown on slide number 18. That's the methodology for this index, known as the MSCI China A50 Connect, right? Basically, what this index that our product is tracking, how is it compiled? How is this 50 constituents compiled? You start off with a so-called a parent index, which is basically a bigger index that is compiled by also MSCI. Basically, it aggregates the A shares, the shares that are listed on China's domestic exchange, right? And then what it tries to do in the middle part of this flowchart is basically in selecting these 50 stocks, it starts off with selecting 2 leading stocks with the largest market size from each of the 11 sectors, right? So there are 11 major sectors, so 2 times 11, so that's 22 stocks, right? And the balance 28 to make up the 50 basically is a free for all. So basically from the index, the parent index, they will choose the remaining 28 based on the largest size, irregardless of sector. Because previously the 22 had already considered some of the sectors, right? The sector leaders in each sector. So by doing this, you get 22 plus 28, you get basically 50 stocks, and that's how the MSCI China A50 index is constructed. And if you were to look at the A shares, right? If you were to look, I said I would show you an appreciation for why A shares specifically, right? And that brings us to slide number 20, right? Slide number 20, I think, does give us a good flavor of the comparison of the track record of A shares versus general China shares, whether listed on mainland or Hong Kong or US. Because if you look at this chart that is shown here, this chart basically shows for $1 that you had invested in 2014, how would it have turned out over the next 10 years, ending in 2023? The index that I just talked about is the one in red, MSCI China A50 Connect. And you can see that this one has delivered something like 80% over the last 10 years, right? Well, the other few that is near this red line, right, that haven't done too badly, right? Basically, there are also different flavors, perhaps compiled by different providers such as FTSE, but also like A shares. Well, they have done also not too badly, right? At least they've returned something positive, right? Basically, these are indexes that compile the performances of just domestic shares traded on China's domestic exchange, including Shanghai and Shenzhen. Now, if you were to look at the 2 gray lines at the bottom, right? What are these 2 gray lines? They are basically 2 indexes, MSCI China All Shares, MSCI China. Well, what these 2 gray lines, what they try to compile these indexes is basically a collection of China shares listed on the mainland, listed in Hong Kong, and also listed in the US. So that's why they call it China All Shares, right? Well, how have they done? Basically, over the last 10 years, somebody put his money inside would have got back almost nothing after 10 years. So you can well imagine that how well the offshore shares have done, right? So I think the outperformance of an A share index definitely is a key reason why we think that this is something that we would like to put forth to investors, an ETF that tracks something like that. And actually, fundamentally, of course, if you think about it, it makes sense as well. Because, well, what are the main China companies that China's domestic audience will be primarily invested into? It would definitely be A shares, right? Because they have had no other alternative avenues of investing for many years. So the natural investors target would be the China A shares for the domestic audience. And if you were to look at what the Chinese government would think about if they wanted to support the market or frame their policies, when they consider about the stock market, which stock market will be foremost on their minds when they think about this? Definitely China, Asia, the domestic markets, right? So that is something fundamentally I think investors should appreciate, right? Hope that addresses these products, right? Olivia.
Mm-hmm. Yes, thank you for that. Now, Tickling, we've got all kinds of investors tuning in right now, right? So, for this particular ETF, you did touch a little bit on this, but I think, maybe you can delve deeper on the exposure, the kind of stocks and sectors that I guess will be within the benchmark index for this ETF, but also the type of investors, this is particularly suited for, only because we've got all kinds of investors tuning in right now.
Sure, definitely. Yes. So what I described just now was the methodology, right? That's how
Mm.
MSCI compiled the index. So if you were to look at slide number 19, this would be the result as of December, right? So this on the right, on the left-hand side, on slide 19, you will see that this is the balanced sector exposure. Basically, the sector exposure of the index and therefore the ETF, right? In terms of the sector, you will see quite a diversified selection of sectors, right? So financials, 19.6, infotech, 15, consumer, 14, industrials, and so on, right? So all about 10 or so, right? None of the sectors is above 20% basically. So that's why we say that it does give a diversified sector exposure for this index. And a large part of that diversified exposure, the end result has been because of the deliberate approach of the index provider MSCI to ensure that there is sector representation through the sector leaders in each of the 11 sectors. Right? The top companies are or so-called the sector leaders are well represented. So if you look at the right-hand side, some names might be very familiar, some may not be, because I guess a lot of people may not be that familiar with the China Asia's market. But some familiar names, I guess, would be like Guizhou Maotai, right? This is it's probably the world's largest spirits manufacturer, right? Great margins. For every $1 that they sell, 90 cents is gross profit, right? So that's basically how profitable their business is. Some other familiar names would be CATL, right? CATL, I guess everybody have heard about electric vehicles, and CATL is the world's largest manufacturer of batteries for electric vehicles. The electric the batteries are basically the engines of the electric vehicles, right? You should see that way. Some familiar names, some other ones would be probably China Merchants Bank, I guess you might be familiar with some of that. BYD, definitely everybody knows, the world's largest electric car maker. So there are some other names that may not be familiar, but nonetheless, these are the sector leaders. And you note, for example, that in terms of the tech names here, the information technology names here, they're not so much the Alibabas or the Tencents that everybody is more familiar with. Those are the so-called platform, right? Tech platforms, social tech platforms, and so on. But the ones that are shown here, the sector leaders on the China's Asia's market is more that those that are related to other parts of information technology. And therefore, I guess they haven't been affected so much by some of the regulatory clampdowns by the Chinese government on tech, right, over the past few years. So for example, Foxconn Industrial Internet, right? So that does smart manufacturing or advanced manufacturing, enables the smart factory basically. for the new age Chinese factory. So definitely it will benefit from the China's government push towards smart manufacturing. It's an arm of Foxconn, so Foxconn everybody should be familiar. Luxshare Precision is a big manufacturer of components for big MNCs such as Apple, right? Contract manufacturer, and Longyi Green Energy. So that's the world's biggest solar panel manufacturer, right? So Infotech in this case is also about renewable energy. Right? In terms of suitability, right? That's the other part of Olivia's question. For to look at slide number 14 for that, that would give you an idea of what who is suitable for. Well, definitely those who want exposure to China's mainland equities market, because it is not easy for the normal retail investor to buy into China's domestic market. Even after some liberalization since a few years back, I think a lot of investors still find it difficult to get their mind round to setting up the facilities in order to treat China's A-share market. But now you can do that, right? You can buy an ETF that buys into China's A-shares, right? So very convenient, and it's transparent and it's transparent as well. So that's the second advantage. It's a rules-based approach. This ETF basically will be tracking an index where you know exactly what are the constituents as well as the approximate weightage over the course of the whole year, right? So it will be investing into China's leading stocks. So you have some peace of mind. You will have instant one-click access to buy into China's 50 leading stocks. So that's the convenient and efficient part of things. It's cheap. It's got low management fee. So I think that's something that I forgot to mention. This feeder ETF is just a management fee of 0.01%, right? So well, that doesn't mean that it's just 0.01% because according to the feeder master structure, right? So we feed into a master. So of course, there's some management fee at the master level that the feeder ETF investors will still sustain. The master ETF, which is the one listed on mainland by China Universal, that management fee is 0.5%. It's typically around that range for China equity ETFs. So what we try to make sure is at least on the feeder level, investors pay minimal fees, right? So essentially, in essence, what you get is you are getting the same kind of management fee access almost as if from Singapore investors, as if for a mainland investor when they buy into the master ETF at 0.5. So for ours, effectively it's 0.5 plus 0.01, so that's 0.51% management fee, right? So that would be the kind of investors, I think, if you want the convenience and you want to buy into China quality companies, I think definitely this is one ETF you should consider.
Thank you for that. Thank you so much, Tekling, especially for the fireside chat, because we already have some questions for you. Now, for those who are just joining in, you are here on an IOP launch exclusive, and we're here with Phillip Capital Management. Okay. So now is the time to also learn and apply what you just learned on this show so far. But I do want to see your questions. Keep them coming for Tekling, and we'll be back with you shortly, Tekling.
Thank you.
So now that you've heard the insights from Tekling on the show, we want to show you how you can apply it and also subscribe to this particular IOP for the launch exclusive, and also really take this to the next level, because we tune into these live shows, we network with each other, but at the same time it's about executing and also applying what you learn. Okay, so if you have your phones with you, follow through with me wherever you're tuning in from. If you have your phones, you can just follow through. So it's really, really simple. So the first part is you're going to go to markets when you open your app, and you're going to click on IPO right here. Okay, so you can see the list right here. It's very, very simple. It already shows you quick access at your fingertips. And that's what I love about the app, right? Everything is just, really intuitive, and it makes sure that you really have access to any tool that you need. So for yourselves, as your own personal investing tools, you can decide for yourself, right? What would you like to prioritize, where you would like to see such information. And also, if you want to, click on a particular ETF and figure out what the details are, like we are on the show for the purpose of this, we're going to be using this. So, you've got all the data that will be updated in real time for you. And we make sure that you have access to the particular tools or information, right, to decide for yourselves whether or not you do want to subscribe or not. But essentially, what I love to do is to keep tabs on it, right? So if you're looking for a particular data, if you're looking for a particular like I guess the timeline, right, the dates, a lot of people are asking these questions already. You can always click on the top right hand corner and you can add it to your watch list. Now this is a great favorite of everyone. You add it to your watch list, you've got that nice bright heart right there, and you can keep track of it. It's so simple. Now, another way to do this is also to go to your Me tab, right? So you can see my profile right here. You go to your Me tab and you click on promotions. So this is just the list of ongoing promotions and everything new that you need to know for your next decision in investing. But essentially, for this component, you've got the post right here, but it gives you all the information. It gives you the objectives, it gives you the key features that Tech Lang himself also highlighted in detail. Don't worry, you can watch the replay of this after the show ends. But you can look at this initial offering period. That's the whole purpose of the show, is to really introduce you to the product, but at the same time to educate you, right? Educate you on more information and why it's also important to look into this particular trending topic. I mean, we're talking about investing in the leading companies in China. So it's important to also keep track of the timeline. Okay. So over here, the IOP 4th to 13th March, but also the official launch, because we're preparing for it, will be on the 20th as listed here. Okay. You keep scrolling down and you can see right here all the components that Techling also mentioned, and of course, rewards for you if you subscribe to this particular one. Okay. So, again, it's so simple. You can open your Moomoo app, you go straight to the IPO tab, right, that I showed you just now, and you can subscribe straight away. And more information right here on the rewards. Now, the last part, and definitely one of my favorite parts, is because we do so many shows for you, right? So under the Moo tab, when you go once again to discover, go to Moo tab, click on live. So you can see we're live right now having this show. But this is where you can find the replay of this. And we're always keeping track of your questions. So if you go onto this tab later on after the show, you can keep typing in your comments, what you learned, any analysis you'd like to see next. If you'd like to see a part two with our guests, definitely type it in, because we're always keeping track of what you want to know. Okay, just navigate these tabs right here and you can see all the other shows that we've had and the upcoming ones. So definitely subscribe to that and also follow our pages to find out more, okay? For your own selves, okay? Keep educating yourselves on this. Now, I'd like to invite Techling back into the room because we have some burning questions for you. Welcome back, Techling.
Hello.
Hello. So I'm just going to dive straight into the first question for you. So someone would like to know in terms of currencies, right? So assuming that the underlyings are dominated by the renminbi, so what is the currency hedge that you're using since the ETF will be in SGD?
Well, yes. So if you were to look at slide 15, so that's something that I would like to highlight.
Mm-hmm.
So that's a more detailed product summary for this product. So basically, this ETF will be aggregating subscriptions only in Sing dollar, which is shown as the base currency here. So Sing dollar only subscriptions. But once it lists on the 20th of March, basically it starts trading on the Singapore Exchange. So there will be two tickers. So one is SGD, and also the market makers will be quoting in a US dollar ticker as well. So basically there'll be two tickers, one in SGD and USD. Well, basically, the underlying assets is in RMB. There won't be any hedge. So basically, what it means is basically if the say the underlying price doesn't change on the China mainland side, but the RMB strengthens, then your Sing dollar counter basically would rise in price because when you convert, of course, the RMB asset rises in strength, right? The RMB strength rises, even if the underlying assets price in RMB does not change, but your Sing dollar as price would rise. So again, it's an unhedged product. Basically, it is also the price of it is also related to the underlying assets when converted to Sing dollar.
Perfect. Thank you for that. Now, for this particular ETF, someone would like to know how often does it rebalance, and also, do you have any more details about the rebalancing of this?
Yes. So basically, the underlying the benchmark index is MSCI China A50, and MSCI the approach is to do quarterly rebalancing for all the indexes, and this one is no exception, right? Because we are a feeder ETF, so we don't actually do the rebalancing. The way that it works is basically we fit into the master, right? The master ETF listed in China. That is the one that does the rebalancing. So whenever every quarter there are new constituents that enter the index or old constituents that exit the index, the master ETF, the one that we fit into, that's the one that buys the new additions and sells the old additions. As an ETF, as the feeder ETF, basically we are just holding one line, which is the master ETF listed in mainland China. So we do nothing. So in terms of the rebalancing, in that sense, we don't do the rebalancing part of things because we can actually just hold the master ETF that does the rebalancing. Long and short, quarterly rebalancing for the index. Or
Thank you for
basically, you
that.
can call that quarterly renewal for the index there.
Mm-hmm. Thank you for that. Now, what are your insights? Someone would like to know just on the trends and also latest news. So, for example, someone highlighted here that 2 days ago, the government set its GDP target for 2024 at around 5%. Now, some analysts mentioned that that is rather optimistic. We would love to know your insights on this.
Yes, well, I think some of these numbers actually were more or less known in advance. For example, the 3% budget deficit that I was talking about,
Mm-hmm.
you
Mm-hmm.
know, I already had that number before they announced it officially. And that's
Right.
because the Chinese government and the agencies does give forward guidance. So already fourth quarter of 2023, they were talking about this number. And also, I think we were also hearing something like 5% for the 2024 GDP target as well, right? Well, that just means that they are going to be quite probably look at policies to boost toward the economy towards this target, right? As I mentioned, I think the government definitely has the capacity to implement policies or implement budget deficits in order to boost the economy. So I think another way to look at it is definitely, I think we are looking at more aggressive government policies going forward. I don't think they will be that aggressive, right? To be honest, I think the deleveraging effort that would basically offset the deleveraging efforts that they have done over the past few years, right? But I think they would do it in a balanced manner to at least make sure that that 5% target is reached. Psychologically, I think that's important.
Mm-hmm. Thank you for highlighting that. Now, the next question. So we've got an investor here who would like to know if they're more, they have a more bullish strategy, right? So how can they align this with your ETF? Are there any Chinese companies that you are particularly bullish on? And also, can you just share some insights on the sectors as well related to this person's strategy?
Sure. Well, I I suppose one way that you can ride on the growth of China, if you are bullish, is basically to buy the sector leaders, isn't it? Right?
Mm-hmm.
Because these are definitely solid companies. They have the ability to ride the tailwinds, policy tailwinds, and so on. In fact, if you look at probably slide 21, just to
Mm-hmm.
appreciate, right, the fundamentals of the index constituents, the 50 index constituents average, the ROE stands for return on equity, right? So they have been quite steady, hovering around 10% on average over the past 7 years. Yeah. So anything above 10% for return on equity is considered a reasonably attractive company in terms of the business modes, the barriers to entry. So this is the average for the 50 companies inside the index. Projection for profits growth for 2024, that's on the right-hand side. So if you add up the aggregate of the profits of the 50 companies, that's what is doing there on that chart. That's expected to grow over 10% year on year in 2024 from 2023. Right. So if you are bullish, it's definitely one way to bet on this, because these are what I would call quality companies, right? High margin, profit, as you can see, expected to strengthen going forward, and resilience in terms of stability, right? So quality is also defined by the stability of margins. As you can see, the ROE is not just high, but it's also stable, right? Consistently above 10%. So definitely you could consider something like that. Well, another way that I can suggest for this question is this, that if you wanted to invest into China and you do have some conviction stocks, I think I wouldn't propose any here, any single one. But suppose you have conviction on China, why do you not consider having a core ETF at the center to represent a diversified exposure to quality Chinese companies, leading companies, something like this ETF, right? It's basically a core China ETF. That's the core position. Then you have satellite positions where you have some conviction stocks at the center, say 70% of your total. Your conviction stocks, individual ones, maybe the 30% of total. So that's another way to think about it, right? So in that way, you basically would be able to focus more on picking those stocks that you really think would do multi-baggers.
Thank you for that, especially that last part and summarizing for us and also the viewers joining us. Yeah, I see a lot more people coming in. We're taking some final questions now, so definitely type in your questions, okay? And thank you so much for being here with us and joining us for this live show. Now, the next question. Now, Techling, I recently took a trip to Shenzhen, China, and it was amazing looking at all that EV space growing, right? And also how much it's grown. So someone would like to know, in terms of this trend, what are your insights for the EV space, in particular, I guess, related to the ETF as well?
Yes. So, well, I just happen to have some examples of major constituents of this index that are related to this trend.
Mm-hmm.
So let me give you two examples, right? That also help you to appreciate, right,
Mm-hmm.
how this index and its constituents can position you to benefit from some of these long-term trends such as EV. The first one that I can talk about is slide 24, which is a case study on BYD, right?
Mm-hmm.
Well, BYD, everybody knows it's cars, but it's actually a fully integrated supply chain. So it's also one of the world's largest producer of rechargeable batteries. So from components all the way to the vehicle itself, it is able to fully integrate across the full supply chain. And that is why it's able to achieve return on equity in excess of 20% every year. So 20% is definitely attractive, right? So that is what BYD has been able to achieve, and it just happens to be one of Warren Buffett's China buys. He has made superb gains on this. The other one that I can talk about is on slide 26, which is CATL. So that's Contemporary Amperex Technology. That's another one that is related to EVs. And it is ranked first. You look at the investment board section, it's got over 1/3 of the global market share in electric vehicle batteries, right? Domestically in China, that number is about 43% of the total electric vehicle battery market, right? So if you were to look at electric vehicles, right, basically there is no diesel engine or petrol engine. Basically, the heart or the heart of the vehicle is basically the battery, right? And that's why it is the most important part probably of the electric vehicle. CATL also earns return on equity that is in excess of 20%. So that is why when you talk about some of these, they are able to grow year on year so strongly because of their margins, because of their return on equity. These two components actually are two, as you can see inside slide 19, they are two of the major 10 constituents of this index, right? CATL at 6.75% and BYD at 3.16%, right? So definitely can consider if you are positive on EVs, right? Of course, there are other constituents within this index that I think also would benefit from the EV trend. Yeah, I think you would want to consider this, especially when I guess they have corrected somewhat over the last few months or last year or so, right? And that definitely means that fundamentally, I don't think that they have deteriorated. Valuation-wise, I think therefore that means it's cheaper.
Mm-hmm. Thank you for that. Now, the next question is also related to the product. Now, can you share a bit more on the dividend payouts and also any other components that they have to know or prioritize when making a decision on to whether to subscribe?
Sure. Well, first of all, I would emphasize that this ETF does not pay distributions, right? And the reason why we don't pay distributions is because it's not really a dividend product. It's not a collection of high dividend stocks. It's more a collection of high quality, sector leading companies in mainland China. We don't pay a distribution, but the underlying 50 constituents, of course, a lot of them do pay dividends. Their dividend payout ratios tends to be about 1/3 of their total profits. Not high, not typically high, right? If you compare to say Singapore stocks, for example, the payout ratios can be more, right? What that means is basically they reinvest their profits, the balance of it, basically 60 to 70%, they reinvest it into growing the business, right? Growing profits. And I think it makes sense too, because when you look at the return on equity, right? I was mentioning that, for example, BYD and CATL, they have returns on equity of 20%, which means that for every unit of for every $1 that they inject into their into their equity, right? To grow the business, you can expect 20% gains, right? For every $1, you get 20 cents of profits. You expect something like that along that basis, based on the return on equity. So if they were to, so basically the most rational thing for the business would be to reinvest the profits, to grow it for shareholders rather than return it in the form of dividends to shareholders. That's incidentally also Buffett's strategy, right? Or rather Buffett's philosophy. When the business ROE is high, it makes sense more to reinvest than to give back to shareholders. So long and short of it, not really a dividend product. is more a collection of leading companies that position you for long-term growth for China.
Great stuff. Now, we'll take one more question right here. Now, someone would like to know compared to other ETFs, right? So they just want to know based on track record. So let's say they've got longer track records, for example, what then would be that key advantage of this particular ETF, especially because we're talking about the future, right? The leading companies in China.
Regard to other ETFs focused on China?
Yes. So I believe the question is, yeah, they're talking about
Oh,
the FXI and also other components of other ETFs. I mean, we won't go specifically and mention them, but
right.
I do think in general, yeah. Let's start with ones that are related to China and also maybe also other ETFs that are related within the sector space that you were highlighting.
Yeah, so well, other ETFs that might be listed in Hong Kong, for example. Well, first of all, I think I would emphasize that our ETF is the only one in Singapore that will be focusing on core China stocks, big companies that are listed in both Shanghai and Shenzhen exchanges on mainland China. So this is the only one. There are some that are focused on smaller companies in China, right? There are some that are focused on specific sectors such as tech sector in China. Well, ours distinguishes itself in that it is focused on core China. Of course, there are also other ETFs that might be listed in, say, Hong Kong that are focused on, say, 50 companies as well. But ours is tracking the MSCI China A50. So these 50 companies are selected in a methodology that tries to ensure reasonably well they have diversified representation across the various sectors. So as a result, no major sector is exceeding 20% in terms of the total, right? So I think it sort of distinguishes us in terms of the index, at least distinguishes it from other indexes and other ETFs that may not have this approach and therefore might be probably more highly weighted in certain sectors than others, right? So MSCI has tried to ensure that this is not the case. So in terms of so depending on which ETF you're talking about, right? So this ETF, what is able to give you access is basically 50 leading companies on mainland China equities, right? Something that is not so easy to achieve, right, for the individual investor because they are not set up to buy China A shares themselves.
Mm-hmm. Right. Well, thank you for clarifying that. And also, I think we've got a few more questions, but I think that's the time that we have left for all questions. Thank you so much for the questions and also participating in this two-way conversation with the audience. Now, Tech Lang, I do want to know what is that final takeaway that we have for the audience today?
Well, the main takeaway is that if you wanted to buy into China's A shares, especially the leading ones, but you find it difficult to do so, well, definitely here's the chance to do it now. Because what this ETF offers you is one-click instant access to 50 leading companies. So at one click, you can buy into these 50 sector leaders on mainland China that you can now access through the Singapore Exchange.
Mm-hmm.
Thank you.
Thank you. And just one last thing as well. How can they really look forward to the launch of this? Maybe we can recap on the dates and the exact details. I mean, we're all gearing up for this particular launch.
Yes, so you guys will be offering it until 13th, right? Which is next Wednesday. So investors can subscribe until that day. The listing day is 20th, right? So to look out for it and look out for press articles relating to China and so on. I think if you're interested in China, don't just stop there. Continue reading. You might even consider things like continually reinvesting into the products of the ETF as it continue because once it starts listing on the 20th March, you can continue investing anytime you want.
Thank you so much to Techling. Now, that was Phillip Capital Management with us today. And to everyone who joined us and listened to the final takeaways, thank you so much to everyone for tuning in. It's always a pleasure to have everyone on the show with us so that we can learn together. Now, that was Techling from Phillip Capital Management. Thank you so much for joining us today, and we'll see you for the next show together.
Thank you. Thank you for having me.
Thank you. Now, to the audience members, if you have any more questions, remember you can still drop us a message down here in the chat box, okay? Wherever you're tuning in from, remember to keep track of this. And it's really important that you keep equipping yourselves for new knowledge and also look out for new shows that we craft and create just for you. So I've got a slide right here just for you to tune in and watch the replay of everything, okay? So make sure that you tune in and also really recap all of the learning lessons and insights that Techling mentioned today for yourselves so that you can keep really learning more about the product, but at the same time, elevate your own strategy and look out for what's next so that we can keep guiding you for your personal finance journey. Now, you can follow my page in app or our social page right here. And we've got 2 QR codes right here. So definitely scan them for yourselves and make sure you follow us. And really, it's a pleasure as always to have everyone on the shows with us. So definitely check in your app, right? So just now I had the demo for you. If you want to know more about the promotion, definitely go into your app, go to your Discover page and the promotions for yourself under the Me tab and Profile tab. Okay. So definitely check that out for the exclusive IOP launch. And it was a pleasure having everyone with us today. I've been tracking all your comments. Happy midweek, everyone. And once again, you're with me, Olivia Higgins.